Fit Money CPA, where we welcome relief veterinarians. And we know you guys have a ton of questions. So one of the questions that I get most frequently is, should I be an LLC or should I be an S corporation? Folks, that's a fantastic question. Let's unpack it a little bit. So the LLC, letters stand for Limited Liability Company, and that is a legal entity. So what the heck's that mean? So basically what it means is it's on the law side of things. So we definitely want you to be an LLC. And the reason being is we are in a litigious society. And if anything were to happen, somebody sued you, we want to make sure your personal assets were taken care of. So that's why we want that LLC. What the heck is an S corporation? That is a tax entity. So that is where we can get some really good tax savings, some tax planning opportunities as well. So let's talk a little bit about exactly what are some of the requirements for that S corporation. So the biggest requirement is going to be that we need to pay you, set you up on payroll with a reasonable compensation. So yes, folks, you're going to be an employee of your own company. And the easiest way to think about this is an S corporation is a separate entity from you. So you're over here, and we've got our S corporation over here, two separate entities. Yes, you may own the S corporation, but think of it as being separate from you. So we're having that S corporation pay you the reasonable compensation. Why do we want to pay a reasonable comp? Because the IRS said they're going to start looking at S corporations to make sure that their shareholders are paying themselves, guess what? A reasonable compensation. So we utilize a software program, and we can help you establish that reasonable compensation. Let's just go through an example real quick. Let's say that your reasonable compensation comes back at $150,000. Now, don't take that as that's going to be what it is for you, because depending on where you are in the country, it could change. So you have that $150,000 salary. We've got you set up on your payroll. So you've made $250,000, $300,000 with your relief practice. What the heck am I going to do with the rest of the money? How am I going to get that out of there? Those are called distributions. And with those distributions, those are not going to be subject to the payroll taxes. So that's where we're getting our huge savings. If you have ever been a sole proprietor, then you know about self-employment tax. And that's basically what payroll taxes are. They're 15.3%. And as an employee, you pay half, and your employer pays the other half. So yes, your business is going to pay half of it, but it's a business deduction. Tax savings. Again, the distributions come out as subject to ordinary income tax, not subject to payroll tax. Huge tax savings. So the next thing we want to do is get you set up with a retirement plan. And why is that? Because we want to make sure that you're paying your future self. And we also want to get a tax deduction for current year. And we do that through just a number of different retirement plans. And we'll have to talk to you about that to see what is going to be best for you. So let's just recap a little bit. You're always going to be an LLC, and I'd like you to be an S Corp. So I'd like you to be both an LLC and an S Corp. Then we're going to get you set up on payroll with that reasonable compensation. Then we're going to get a retirement account set up for you. So again, that you're paying your future self. Thanks for listening. If this has not answered all of your questions, please hop on the website and hop on my calendar. Happy to chat with you.